Hey guys, Taylor with GammaEdge here, coming at you with a market recap for April 30th, 2025. The theme continues today, that being any weakness has been bought up. Bulls continued to remain strong in this market. This is day 7 in a row of finishing up on the day. All that's great. Let's get into pre-market prep and our intraday analysis from today. Starting out the market trend model, as we always do, this was constructive to the upside. Since last week, we've seen a nice trend progress higher, both in the short-term and intermediate term, which has been supported by filtered take buying for the last 4 days. And so just quick background, our market trend model is built off the tick index. You're not sure what that is, feel free to Investopedia that. But effectively what that does is it measures the buying versus selling that's taking place in the marketplace. And so what we effectively do is we aggregate those. We create a time series so we can understand both intraday trends, multi-day trends, and multi-week trends. And so this is effectively what this visualization is telling you is it's the trend and the momentum in the market. And just so you guys can compare and contrast, here's what the market trend model looked like back on March the 5th. It's effectively the exact opposite of the conditions we have now. The trend of the market trend model is going from the upper left to the lower right. That is, definitionally a downtrend. And so at this time, this was not a constructive, kind of market structure from a swing trading point of view. But now going back to today's conditions, as we've been saying, conditions have improved. And trades alongside have made a lot more sense now than they did, back in March, obviously. Next, we move on to the options market, specifically SPX options market. Reason for that, option market are inherently forward-looking. Second, SPX is the largest liquid options market. And so by understanding what's happening in SPX, we can understand kind of in general how the market is positioned on a forward-looking basis. We always start out with SPX-A. This is the cruise ship. It's the larger of the two structures of the SPX. The other one is SPX-P. And so going back to SPX-A, we can see above and below spot price call dominated structure, above spot price, mixed call put dominated. However, one thing to note is, while we are in a period of transitioning, it is transitioning for the better. By that, we mean that we're seeing, evidence of at least puts leaving the structure, calls coming into the structure. And especially under spot price, we're not seeing a lot of put speculation to the downside. And remember, it's our belief that markets are driven by out of the money call and put speculation. So next, what we want to see is out of the money call speculation come into the complex. And again, just a reminder, SPX-A, this is your larger kind of slower moving institutional capital, as these are the monthly and the quarterly expirations. So while this structure does take longer to change in terms of positioning, relative to the SPX-P that we'll get to in a second, we have started to see that transition, and it's correlating with a market trend model lining up with it with the SPX-P. And so speaking of SPX-P, here's the SPX-P full complex. The SPX-P, the way it differs from the SPX-A is its size, first off, is not as large, 3.6 million contracts versus, it's 14, 15 million at SPX-A. And this is where your kind of shorter term speculators are positioning. This takes into account ZDT, all your daily, all your weekly expirations. And so these turn over a lot more rapidly, therefore positioning changes much quicker than the SPX-A does. So right the way that it progresses, market trend model shifts first, then SPX-P, then SPX-A. So looking at SPX-P, again, call dominated below spot price, above spot price, a mixture of calls and put dominated strikes. However, just looking purely at the distribution of strikes, we can see that we're in a call dominated environment, so that is good to see. The reason that net delta is not green as well to match the kind of just absolute net OI in the structure is due to the fact that when you apply the delta to that open interest, the moneyness of those puts, greatly outweighs the moneyness of those calls. So therefore, as you know, the delta of an out of the money call is a lot less than the delta of an in the money put. So it takes a lot more out of the money calls to match one in the money put. So effectively, we need to see a lot more call speculation come into the complex. But net, relative to a couple weeks ago or a month ago, structure has certainly improved. And at a minimum, we do have that call dominated strikes below spot price and no real out of the money put speculation. Lastly, looking at our transition zones, the delta transition zone, this was well defined at 59.40, 54.95 to the downside, 55 to the upside. So if you're a bull, we want to maintain above 55.55, which again we're into call dominated territory there. Below that into the transition zone, we expect to see a lot of chop. I understand this is a large range, but that inherently is what the chop is, and the transition on the higher time frames can be quite wide at times. And again, right, volatility is still relatively high. But it's funny, right? Because this VIX at 25, the last handful of trading sessions has felt like a VIX of 15, but we need to recognize that the VIX is still relatively elevated. So the size of this transition zone is not crazy to see. So again, just recapping kind of from a longer term kind of swing trading perspective, because right, 0DT intraday trading, that's something separate we'll get to in a second. Conditions have certainly improved. Market trend model trending higher. SPX-A, SPX-P structures are transitioning for the better. Next, we move to our ZDT structure. Again, SPX, this is where 40, 50, 60% of daily volume within the SPX complex occurs. And so this really sets kind of our intraday levels for the day. So here, the key zones that we have highlighted, first off, the pink, this is just your implied expected move from the options market itself. Next, we have the white box and the blue box, that is your delta and your gamma transition zones. Again, within these transition zones, simply put, we just expect to see a lot of choppy price action. Above the transition zone, we expect to see kind of call to continuation higher. The caveat there is we need to see intraday volume in the market trend model trending higher as well, meaning that call speculators are leaning into that move, for lack of a better term, and they're expecting higher price action on an intraday basis. Same thing to the downside. Below the transition zone, we're expecting kind of sideways to lower price action, but keep in mind, understanding just the environment that we're in, kind of, if we're on a global basis, more in a bearish, in a bullish structure. Scratch that, restarting. So again, when we break below the transition, then our expectation is more sideways to lower. However, again, with the upside, it's important to the downside to recognize what the overall environment that we are in. So remember, the market trend model is strong to the upside, so we would be fighting kind of the longer term trends. However, at the same time, if we're seeing intraday volume supporting that selling lower, we start to see filter tick selling take place, then we have to recognize that as well too, right? So there's only a handful of tools that we monitor on an intraday basis, and just kind of painting the mosaic of the day, of the structure of the price action with those. So right in, and just going to those key levels, like the bottom key level is 5,500. This is the bottom of our drunken sailor range. That's the last transition zone I'm going to talk about. And simply put, within the drunken sailor range, we can see that the distributions of calls and puts, A goes back and forth, and B is not significant towards one side or the other. So as an example, just because we break to the top of the DEX transition zone doesn't mean that on a net basis that call speculation is super strong. So what we need to see in that region is we need to see an acceleration of call volume higher, market trend model activity higher, to help us kind of propel us through that air pocket in the structure. So again, right, then we're just recapping the key levels above 5,500. We have a big air pocket in the structure, so a lot of choppy price action, hard to really infer a direction one way or the other absent any intraday volume activity. Up to 5,570, and then to the downside, below 5,500, we have a pretty massive air pocket down here to 5,530, 5,430, 5,425. So again, going back to price action today, here we have this line right here is 5,500, kind of the key fulcrum point that we were talking about in the structure. And then up here we have 5,570, top of drunken sailor range. I just like to have those two levels marked on my chart personally every day. And then remember that downside level is 5,530, 5,525. That was the big kind of goalpost that defined this air pocket in the structure right there. So when we got that gap down lower to start, and it was pretty aggressive gap down lower, that moved to 5,430, 5,425 made sense. Now, is the reason that move stopped near 5,430 because of the option structure right here? No idea. Ultimately, don't care the reason for it, but what we do care about is the process and the understanding of structure, and kind of how we can use that to our advantage, because we knew coming into the section that once we were getting down to 5,430, 5,425, if you were short, that was kind of a no-brainer place to take a little bit of your profits at least. Or if you're looking for some kind of bounce, then maybe that was the level that we saw you get a bounce from. Now, keep in mind, we got a pretty large gap down, and price pretty much was a vacuum straight down at the open. So like, not hoping and praying for a bounce here. But again, it's just understanding the probabilities and where the risk to reward in the trade is. And so once we got down to this 54.30, that risk to reward, that dynamic R was not as good there. However, keep in mind, if we were able to break through that 54.30, 54.25 and further acceleration to the downside, then that conversation changes. But that didn't happen. And so ultimately, right, we got to move back to 5,500, again, key fulcrum point. And then, yeah, from there, I mean, it was just fairly choppy price action within the drunken sailor zone. Massive push up here in a day, last 15, 20 minutes of the session. So whatever caused that, went up right to the top of the drunken sailor range. So right, and then for you folks out there that just like some simple, other market data points, the main ones that I use is the blue line is the opening print, the white line is current day VWAP, the yellow line is prior day VWAP. And so right, one tell on the day was price spent the majority of the day above an upward sloping VWAP. That is generally a constructive sign, especially when we are above the opening print. That was also the opening print coincided with 5,500 today, making that level pretty easy to be a key level. Second is that, despite the perceived big selling on the open today, the market trend model really didn't reflect that. Like, yes, we got a little bit of a move lower, a little bit of filtered tick lower, but relative to the buying that we've seen, that selling really was nothing at all. And then right, once price did resume its move higher, that the market trend model progressed higher nicely as well. So again, that's why I started the video saying it was a nice recovery day for the bulls. Right, and then the last point I want to make today, again, going over our intraday volume analysis. This is the SPX ZDT volume analysis. You all should be familiar with what this is by now. I really don't want to spend a ton of time explaining what this is. Again, you can go watch a prior video for that. But again, what we can see is on the call side today, the majority of that volume was fairly flat. Yes, it was a little bit higher, but more or less fairly flat on the day. But what we did see on the day that was kind of a tell was the put centroid was moving higher all day. So again, while the call centroid time was kind of flat to a little bit higher on the session, I don't know, more or less kind of put a lid on the upside, albeit, last 15, 20 minutes, we did get a massive ramp there. The put side was trending strong all day. So that again kind of helps to put a floor under the market, so to speak, because a common signature of when we have at least a put centroid trending higher is price really isn't going to make like a meaningful and sustained move lower. You really need to see the money put speculation aggressively moving lower, call speculation aggressively moving lower as well. We obviously did not get that today. Right, and just to show you guys the utility, this is your first time seeing this. So this is what the volume command looks like at 1 o'clock today. We can see that the call centroids are fairly flat, the put centroids fairly flat to trending higher. And so, right, if we understand what the behavior of speculators have been from the open to 1, we can kind of project out what those centroids will be through the close, and price follows the centroids. Price follows where volume is transacting. So again, at 1 o'clock, it looked that the signature character of today was going to continue to be choppy, which it was. And again, last 15 minutes, whatever happens during that time. A lot of agents coming into the market, but we have from the open until 3:30 to do what we want. But look, I also understand there's a lot of people that make all their money last 5 minutes of the trading day, and if that's you, more power to you. So again, just to reiterate the points, yes, we got that move lower today, but intraday volume really was not moving lower. Market trend model was certainly not selling off. Then we got above VWAP, trending higher all day, back above the opening print, back above 5,500. Market trend model started expanding higher. Looking at our intraday volume analysis, the put side was moving higher. Calls was at least not rolling over. So if you were, getting chopped up trying to short the market, thinking we were going to dump lower because of what happened in the morning, then hopefully you can understand how using our tools and levels could have helped you avoid that. And just a quick trader view for myself that I did today, just took one trade, or sorry, took two trades. I took a long in here, playing for a move higher, ultimately got stopped out. But then when we got this little consolidation right here, above 5,500. Again, remember, everything was trending higher at this point. VWAP was trending higher. Market trend model was trending higher. So I was just looking for sorry, I'm backing up we're at 5,500, but in the context of the drunken sailor zone, and this and this price action day was just really slow, really choppy. Really weren't going to get, kind of a quick like move higher is what I was looking for. Hadn't really seen that yet today. And so I was really just looking for a tight, well-defined area where I could risk a couple points. And if I got stopped out, whatever, I'd lose two or 3 points. So that's exactly what I got right here. This is the 2-minute chart, but I was risking three points, right, to make high of day is what I was playing for. That's 14 points. That's amazing risk to reward. We actually happened to get that pop higher, progressed higher. I was just locking in profits along the way because I didn't really have a great price target after high a day. Obviously, prior to VWAP played an important role, kept bumping our heads along that pretty much all the afternoon. And so, yeah, that's just one way that I use the tools, right? I was just intraday scalping with futures, but if you're a credit spread trader, selling puts below this introid, above this introid, whatever, based off the character of that day, makes a lot of sense. So with that, it should be clear kind of from our pre-market prep how we understand the environment from more of a swing trading point of view, and then we understand the environment kind of from an intraday trading point of view as well. Then using our intraday tools to trade that price action effectively. And so with that, you guys have a good night, and we'll see you tomorrow. Thanks. Bye.